What's up, YouTube? Welcome back to the Crypto Junkie channel where we talk all things crypto. Today, we're going to peel back the layers on a bull run forever email that's about to get sent out tomorrow. So by the time you see this, email will be out. There'll be a title to it, but this is the 45th email now that we've published. I'm on the hunt for the 1,000 emails being sent out. So I think we're somewhere around 600 between this and the other one, which is Empire Alerts. This one's free though. So check this out. There's this conversation that's always had around two things that I want to discuss here today. First off, the conversation around deflation and Bitcoin. Secondly, economy people, right? Financial people are constantly talking about inflation bad, right? Like orange man bad, but inflation bad, meaning all inflation of any sort all the time is bad, right? And that's like two generalities that you're constantly hearing. And I just want to shed some light on those, right? Because that's not true. So let's take the first one, which is that inflation is bad, right? You hear this all the time, talking heads, people on CNBC, oh, inflation is bad, this, that, right? And especially at 7% CPI right now, got a lot of people crying about it, right? And so the issue with inflation is that it's not bad out of the gates, but it's not like there's a formula to where you know exactly when it goes from like benefiting to not benefiting, right? So let's just make it real simple. When the people who are closest to the inflation benefit the most, that is the general statement. That should be said from everyone. This should strike you as common sense. This should strike you as, feeling good and make sense, right? But unfortunately, we don't hear this. So those closest to the inflation benefit the most. So the reason why this is true is because as those dollars keep circulating more and more and more and more, it thins out the second and third and fourth and fifth person that's trying to use it, et cetera, et cetera, et cetera. And then that starts to create the decline in purchasing power. Yes? But the first guy to get it, the banks, right? Like all these bailouts, going back to 2009, going back to all these points in time when there's been a recession, let's call it, that the banks are usually the first person to get the money, which means they're not affected at all. They get the maximum benefit to that new freshly printed money. 40% of the circulating supply of the United States dollar has been printed in the last 2 years. That's insane. That's never ever happened at any other point in history. Let that sink in. All right, so anyways, I've shared this quite a bit, these stats, so if you've been following along, listen to the macro shows that I'm on, you'll have heard this, but again, repetition is key. Repetition is key. So here we go. At 2% inflation is the Federal Reserve mandate, right? That's the Fed's mandate. It's in and around 2% inflation, yes? Okay. At 2%, over 20 years, your money is devalued by 32.7%. At 5% per year, over 20 years, that's 62% devaluation of your money. Now, what if we can't rein in this 7%? What if it keeps going up? And what if it stays like 7 to 10% for 2-3 years? Well, that completely skews these numbers, doesn't it? And even if you went back to 2% after that, you have a new data set essentially now. You have a new devaluing of your money that you might not realize. So, okay, there's inflation. And the reason why I say that is because, if you buy HEX, then you already know that you're the direct beneficiary of that inflation and it's not affecting you that way. It's a net positive. It's a feature, right? It's a benefit. Okay, so, and then the second thing is with Bitcoin, I don't know why this is a weird one, but it's like Bitcoin is deflationary. Well, not right now. Yes, that's true, but later. Right now, we're still mining. We're using proof of work model to mine through algorithmic functions to mine all the Bitcoin. And we're at like, over 18 million. And so when the 21 millionth coin is mined and that whole model is done, right? And everything's going to have to pivot after that point, then it becomes deflationary. But right now it's not deflationary. So to talk about it as though it's deflationary is like stupid because you wouldn't do that with other things, right? Nor would anyone around you accept that. Like, I don't know, like look at how many people that pretend to be a millionaire when they're not. They get made fun of, right? And rightfully so. Like fake it till you make it is like a good thing, kind of, but within like really tight boundaries. So I would just say like, just chill out on the whole deflationary thing until it actually becomes that. Right now it's still being mined and the store of value narrative is great. Like it seems like that's going to be the thing that works with Bitcoin. Leave it alone, man. Stop messing with it, okay? So that's the downside to a truly decentralized unit of measure like this, currency like this, is that you'll have people define it and market it and try and put their brand on it and try and take, hostile control over this in different ways. Some of it's nefarious, some of it's not, because there's like no manager, there's no foundation, right? And that's a big difference between ETH and Bitcoin is, ETH has the consensus foundation, it's got Vitalik, it's got all these people that if I tweet out something right now, positively or negatively affect the price. I could argue Elon Musk did the same with Bitcoin, but again, we'll shelve that one for later. So anyways, there's this great conversation in this thread that Lynn Alden posted on her Twitter account that I wanted to kind of bring over and have a conversation about. Okay, what she was basically presenting and arguing is that right now, there's no bank product, there's no savings account, T-bills, nothing will outpace inflation right now. And we've talked about that over and over and over again. Why do you think NFTs are popular? Why do you think meme coins are popular? Because people are having a hard time with outpacing inflation. So there's this hunt for yield. I believe I started talking about this like last year, right? Well, we're only in the beginning of 2022, but you get what I'm saying. Long time now. And yes, this has been the census, the cornerstone of my debate, which is that, or the thesis rather, is that, you can't outpace inflation. You're going to get some really weird shit that happens in the market. And what better expression of that than a digital form of, some of it's art, some of it's not, but we're associating hundreds of millions of dollars to JPEGs, right? It's kind of strange. So anyways, this chart represents that. So total US debt as a percentage of GDP versus CPI adjusted T-bills. T-bills are in orange, federal debt percent to GDP is in blue. You notice this is the last time this really started happening, hence why it's circled. All right, so you can go back historically and look at what was going on back then and what was life like. I think that'd be good exercise for you. So the argument, or the lens that we can start to now look at is, okay, well, can't we start to look at big tech and big stocks as let's call them blue chip stocks as deflationary if the amount of shares outstanding have been dropping over time, which has been the case for Apple since 2011. So over the last 10 plus years, the actual outstanding amount of shares has been going down. So that is deflationary. So it is essentially a centralized security that is now deflating. So again, there's going to be a ton of people that use that as a selling point, right? I would argue that from a Shiller PE ratio of it being 22 years out from you breaking even or seeing any profit is still a huge risk to take on right now. But there will be people that are taking on that risk. So the argument here is that if you're willing to take on that risk, Bitcoin is a way better option. Okay? And so I got my own spin on it at the end. So here's essentially the breakdown. So because we have this deflationary environment with Apple now, here's essentially what investors would be asking themselves. Would I rather hold dollars that are currently increasing by 12% per year and quantity and yield sub 0.5%, or hold Apple shares for which there is less each year and also yields about the same amount? Okay. So what are you betting on? Essentially what you're betting on and you're tying yourself to is the 150,000+ employees, all the stores, all the tech, and their ability to be able to make and sell great products, which is not, I think that's usually fundamentally what people are kind of associating themselves with, big brands like Tesla, etc. But that's essentially what you're doing. Think of that like a small country. In this case, it'd have a market cap of about 2 trillion, and obviously it has close ties with the US and China, for better or worse. Okay, so my concern in the long run is that the variety of policies and challenges will eventually cause Apple price to flatline, which that's probably true. Again, if we're operating off of a 22-year window or roundabout there, from a return on investment standpoint, that's a long bet to take right now, right? And so now let's pivot, because we're going to get to the Bitcoin thing in a minute, but there's this narrative that's going around right now, which is that ETH, because the inflation rate is lower than Bitcoin, it's harder money than Bitcoin. So I really don't know why everyone's got this. They try and put on this argument that we're better than Bitcoin. You're not going to win it at this point, and it's going to take you at least 13 years to prove it. By then, Bitcoin, if it's still around, will have 20. It's 13 years ahead of you. So just stop, right? So ETH's inflation rate is lower than Bitcoin's. Yes, so the argument is that it's harder money. But again, going back to what I said earlier, there's no foundation that's going to dump on your head at every single micro top, which is literally what's happened with the ETH Foundation over the last 12 months. I have no clue how they time it, But coincidentally, when they cash out money, 20,000 ETH here, 50,000 ETH there, that marks the Pico top, okay? And sometimes the macro top. All right, so the big difference is that we're talking about a difference between a coded function and a group of people that are deciding it. So it's decision versus inability to be able to inflate. There's a big difference, right? And so now if we're talking about that, we're talking about in the realm of being a security, because there is some sort of centralized entity and group of people making this decision. What she's saying here is that if we judge managed fiat corporate currencies based on their human decided inflation deflation rate, Ethereum is something like number 100 in line for deflationary currencies. You're talking about plus or minus 1% per year. So whereas Apple is about negative 5%. So they would be like 100th in line. It's not really a good argument. I just don't think they've really thought this through. All right. In other words, assets that compete for artificial scarcity have to compete against hundreds of companies with revenue that do share buybacks, including big ones like Apple. Okay, so that this doesn't work. So the narrative of ultrasound money is kind of silly. What would actually make more sense, and what she suggested, is best smart contract blockchain. I like that. I liked it a lot. If you ran with that narrative and just stuck with that, I think you'd have a much better success, because there's still the battle to be fought against other layer ones, which other layer ones are simply winning off of price right now because it's cheaper fees, but they don't have the network effect that ETH has. So ETH has the network effect, but yet they're trying to take on Bitcoin as what? Like ETH is the programmable, usable money, whereas Bitcoin is more like the store of value. Everyone has their place. So ETH should be more worried about trying to keep its throne and trying to come down on its gas fees, aka not taking another fucking 6 years to complete and roll out ETH 2.0, and worry about their own yard. Not their neighbor's yard and how green their grass is, right? Kind of stupid when you really break it down like that. So you're not going to beat it. Bitcoin is a commodity. It has 21 million cap that's never going to be changed. And if it is changed from a code standpoint or algorithmic standpoint, that is called a hard fork. And that'll come with a new name, like we've seen with Bitcoin Cash and Bitcoin SV, right? So, yeah, the point in the article, or the point of the whole Twitter thread, is we're talking about the difference between artificial scarcity and true scarcity. So this is where I insert my commentary. If that is the case, then wouldn't that make Pulse Chain the biggest threat to especially ETH, but both ETH and Bitcoin? Follow along with me here. Okay, so Pulse Chain will be deflationary from the start. So boom, just like that, the entire supply is created. And then every millisecond from that moment forward, every transaction will burn a little bit of Pulse. So from the start, it's deflationary. So two biggest questions is, how quick will it take Pulse to beat out ETH in terms of its inflation model, right? It'll be cheaper from the start. It's going to take a long time and a lot of transactions for it to even start to get bogged down like ETH, right? It's going to take a really long time because it's operating off of similar code base and similar modeling, right? It's just the game theory is better because they're bringing a duplicate copy of everything from your MetaMask and all your primary wallets over onto the Pulse network. They've already got a bridge set up, so it's easy to go from other layer ones to this one, to Pulse. All right, so the game theory is better, and it's deflationary from the start. And you don't have to depend on, guys who are now billionaires to come out with a 2.0 that's taken how many years to roll out. I mean, every single update with ETH has been painfully slow because that was a bunch of people who never had money before. Now they got money, and now they got fat and lazy, as they say, right? A bunch of fat cats, right? So I immediately see that Pulse from the get-go is a huge threat to ETH, but it actually becomes, I think, a threat to Bitcoin as well, from like ultrasound money standpoint, like this whole narrative, if we want to call it that, of ultrasound money. So it would make Pulse like ultrasound money then, wouldn't it? Because ETH is trying to argue that it's better than Bitcoin, but isn't Pulse Chain better than ETH? So then it's better than both. If that's the argument, I guess that's my point, right? So like ETH maxis are saying, oh, ETH is better than Bitcoin. From that standpoint, it's it's ultrasound money. Well, if Pulse is better than ETH, then that means it's ultrasound money? I don't know. The line of thought there doesn't really make sense, but hey, let's go with it. Whereas I tend to, where I fall is, leave Bitcoin alone for now, right? It's gonna take more time to challenge that store of value narrative, okay? It's pretty isolated there. That seems like that's the narrative that's gonna work. Leave it the fuck alone, okay? Who knows what's gonna happen with country adoption and stuff like that, and any competitor which I would argue Hex is the closest competitor to Bitcoin, the actual true competitor in terms of an ROI standpoint, best performing asset standpoint, store of value that exists within it. But let's let all this run out. Let's see what happens with all this. You know, like Hex has a long way to go to prove that. It's got to catch up on that 13 years somehow, right? And then who knows what's going to happen with Bitcoin in between now and then, as it's trying to catch up. So, I mean, Hex has more time to prove itself in that standpoint, but I would definitely put it up there as like, that's one of the few that I've seen. I think the only one that I've seen that even challenges that. So anyways, I'd love to hear your thoughts and comments below. Like this video if you just want to help us get it in front of more people. And if you're brand new here and you like this sort of conversation, well, then stick around. You can subscribe to this email for free, bullrunforever.substack.com. Or you could just subscribe and hit the red button, turn it to all, and that way you won't miss out on any future uploads. All right, see you again real soon.